me to help us set up the trading day, we get to, as always, Kevin Hincks, co-host of Fast Market, live from the CBOE this morning. Take us through your thoughts on this job report. Good morning, Kevin. Happy Friday.
Good morning, Sam. You know, there's a reason why we call jobs data the #1 data point of the month, and that because the markets move. In this case, it's the bond market, like you mentioned. I mean, yields now down below 4.1% at 4.08. Here's the numbers. Non-farm payrolls, 22,000 new jobs. Unemployment rate, 4.3%. Private payrolls, 38,000. Manufacturing, down 12,000. Here's one good news. Labor force participation rate actually upticked to 62.3%. Wages, here's more good news. Wages up 0.3, but year over year wages, 3.7%. That's down 0.2 from last month. So, Sam, we've got low, remember, we've had weak employment data all week. From JOLTS to ADP, jobless claims, even the ISM employment number was weak. So now this fills out the week, and what has happened? Interest rates. Interest rates come down. Now, Sam, like you and I talked about yesterday in very brief terms, there is now a percentage of a 50 basis point cut by the Fed, something we've been hinting at all week if these numbers continue to go down. Now, here's some of the others. Another interesting thing that everyone has to understand, federal government down 15,000 jobs. Since January, down 97,000 jobs from the federal government. Remember, final 12 months of the Biden administration, they averaged 41,000 federal jobs per month. Also, healthcare gained 31,000. Again, manufacturing down 12,000. Revisions, interesting revisions. Down 27,000 June, but up 6,000 in July. Kind of interesting there. But all things considered, this is another confirmation of a weakening labor market. But inflation, the wages data, didn't scare people talking about inflation as that number downticked 0.2, Sam. Really fascinating morning here. But what's weak for the U.S. economy doesn't mean weak for stocks. Yields going down like this have stocks going higher this morning.
Yeah, a bit of bad news for the economy, good news for the markets as far as that pricing in of rate cuts, as you say, Kevin, very much opening the door now as far as the CME Fed Watch tool is concerned for 25 bips in September. But to your point also, I mean, there have been some talking about how they may even preemptively go 50 off the back of what we've heard this morning. It does look like the market is still in favor of 25 right now. But what I found was interesting off the back of those numbers was the change to the thinking around October as well. I think that jumped by about 20% as far as those bets are concerned. It's fascinating that you point out also, while we have certainly seen the final piece of the puzzle in this whole labor market picture now, while it is certainly confirming the trend that it is weaker, I mean, it's not collapsing, but also if you look under the hood to your point, I mean, it is a lopsided labor market too. I'm just wondering, what this means for the next cab off the rank, which will be the inflation print, whether this would undermine the rate bets right now in the market.
Yeah, next week we get more data. Remember, next week when we come in, we'll be in a Fed quiet period, right? September 17th, we're going to get a lot of information. We're going to get a Fed announcement, but we're also going to get an SEP. Remember, that September release brings another SEP in. So we're going to get a ton of information coming up here. But I think this is key as the data now starting to shift. Do we get Fed speakers before? Do we get a whisper and a guide towards a more significant rate cut? I think the CPI, PPI data we're going to get out next week going to be crucial to the trend. I think a 25 basis point cut now is now locked in. Remember, the inflation data that we get, the reason this number is so important is because we get jobs data, but we also get wages data, and that's inflation. And the year over year data for wages down from 3.9 to 3.7%. That relieves some of the inflation fears and puts us focusing on the labor market. And remember, we almost had a 4.3% print last month. This one is now over 4.3% if you break it down several decimal points. So I think this puts the pressure now right on the Fed. Do they go 25, or do they start leaning towards 50 basis points? Or the next scenario, which you just mentioned, do they start lining up 25 basis point cuts, Sam?
Yeah, I think that unemployment number takes us to the highest since 2021. Something to keep an eye on. But as far as the reaction function in the market, obviously positive for equities, particularly if you're looking at some of the rate-sensitive areas of the market. But I do want to touch on what you mentioned earlier with that 10-year now sitting at 4.07. I think I was listening this morning that the lowest close we've seen this year is something like 3.9999. So that 4 level is very much key to watch at the moment. I'm just wondering, how investors or one should be watching that right now, and particularly what it means for the potential for some of those mortgage rates as well.
Well, I learned years ago from a specialist on the New York Stock Exchange that humans like big round numbers. So 4% on the 10-year yield, if we reach that level, will attract a ton of investment interest and order flow. And so, yes, will that be a sticky area if we get there? Of course it will be. Because human beings see big round numbers. Remember, we were 4.8% not very long ago. So this is a dramatic move in interest rates on the downside. And so what does that mean for Fed rate policy going forward? Well, the bond market, the benchmark reading for interest rates is really telling a pretty incredible story here. So, yeah, it's worth watching. We still have more data points to go. I think if you get any Fed speakers today, they'll all be hedging and saying we need to see more information. Obviously, CPI next week that we'll get, I believe, next Thursday. Yeah, Thursday. Well, it's actually flipped next week. If you notice, it's Wednesday PPI, Thursday CPI, but that CPI number will be vital for the momentum that we have going on interest rate cuts. So we'll keep watching, Sam. But right now, stocks, and especially, here's one thing to notice. The Russell was down pre-number. Now, because of that move in bonds, the Russell, which is so dependent on lower interest rates because they have more debt, really spiking on this news. Now up 0.6% on the Russell futures.
Yeah, we could be in for more of that rotation, which we'd certainly seen some signs of earlier this week. Just want to shift from the macro to the micro. We had these tech CEOs at the White House where Trump had sort of been signaling that, these semiconductor tariffs could be coming down the pike. Fairly substantial, I think the wording was, unless, here's the but, if you invest here. Hence why, there are a lot of views that sort of Apple's got off the hook with its deal that it managed to cut. What's your assessment of what we're seeing playing out here between the relationship with Trump and big tech right now?
Well, I think if you look at the pictures from last night, Mark Zuckerberg sitting right next to President Trump. We also had Tim Cook there, Bill Gates, Sam Altman from OpenAI. As far as I read, those are the only CEOs that were there. It would almost felt like a feel of a cabinet meeting as they went around the room, each person talking. But you're right. The Trump administration believes in pressure, and their pressure is to get manufacturing of semiconductors or crucial things in general back to the United States. That is their goal. They're going to put pressure. Remember, everyone wanted to move from China to India. Now there's restrictive tariffs on India. Now that has more to do, I think, with the war in Ukraine and putting pressure on Russia. But I think, we haven't even discussed geopolitics yet and what's going on there. But yeah, that CEO meeting, certainly it was more of a photo op than I think any hard business being done. It was more of a confirmation, but certainly to see those, high-profile CEOs sitting at the White House and Mark Zuckerberg sitting right next to President Trump, pretty incredible pictures.
Yeah, I mean, it's easy to nitpick, isn't it? But it is such an important point you raised, Kevin, about, who's who in the room and, where they're sitting. It's kind of like a wedding table, your best man in order of popularity or something like that. But yeah, they certainly are in the club as far as those that manage to get a seat at the table there. Kevin Hincks, thank you so much for breaking that all down for us this morning. A very busy day here.